Welcome back. The first two chapters have been tough. Journal entries are almost the language of accountants. It wouldn't hurt at all to go back and review journal entries. Make sure you have a good understanding of those from chapter 2. It wouldn't hurt at all to read that chapter again, go through examples again to really get familiar with those. If you go through them again, it should be a lot easier than it was the first time around. Okay, chapter 3 talks about 4 types of adjusting journal entries. First of all, the cash basis of accounting is what you and me are on. We count income when we receive cash. We count expenses when we pay cash. Organizations, on the other hand, are on the accrual basis instead of the cash basis. The accrual basis means we count revenue when we've earned it, even if we haven't received the cash, and we count the expenses not when we pay the expenses, but when we've used up the expense. Let's walk through 2 examples, or an accrued revenue and accrued expense, and then we're going to have 3 other types of adjusting journal entries. But the first 2 are accrued revenue and accrued expense. So accrued revenue is when goods and services have been provided before the cash is received. If you think of going to the doctor's office, some doctors want you to pay on the spot, but my doctor is willing to bill me. So they bill me for my services. So the standard journal entry would be for the doctor's office, debit accounts receivable or some type of asset, and credit revenue. Their asset has gone up, someone owes them money, I owe them money, and they're going to count that sale or the revenue from that doctor's visit when I come in to see them. The other one is accrued expenses. That's cash paid after the expense is incurred. So you and me often get paid next month for work we do this month. We don't get paid every day, and sometimes we get paid on a week delay or a couple week delay. So they've got to go ahead and count the expenses for this month even though they haven't paid an employee for this month. They won't pay us until next month. So debit expense, and it may be wage expense if it was wages, and credit a liability account of some sort. For example, wages payable. That would be a liability account. If it was electricity for an electric bill, it might be utility expense or electric expense. And then credit, instead of wages payable, credit accounts payable. So those are the first 2 types of adjusting journal entries. So the first 2 types of adjusting journal entries are accrued revenue and accrued expense. Accrued revenue, when the dollars are received after the service has been provided. Accrued expense, the dollars are paid after the expense has been used up or incurred. The next 2, unearned revenue and prepaid expense. In this case, the cash is received prior to the providing of the goods and services, or the cash is paid prior to the expense being incurred. Let's look first at accrued revenue. The cash is received prior to providing the goods and services. Whoever pays anything in advance? Well, sometimes you have to pay rent in advance if you rent a building. The example I use, the Super Bowl. Let's say Greenville College was going to have a Super Bowl commercial on next year's Super Bowl. I think they're $5 million, maybe higher, for a 30-second commercial. And I think Fox is the one broadcasting the next Super Bowl. So from Fox's point of view, Greenville College writes a check today for $5 million to Fox. That's unlikely, but we'll use this as an example. So from the Fox's point of view, they've received the cash prior to providing the good or service, prior to providing the ad for us. So they would increase cash, debit cash. A cash debit is an increase in cash for $5 million. And they'd have a liability account, unearned revenue. Unearned revenue is a liability account, even though it's got the word revenue in it. They owe us something. They owe us an ad on next year, probably February. It's early February Super Bowl, or they owe us our $5 million back. They owe us something. Then when they put the ad on, there's an adjusting journal entry. Now the textbook usually talks about the adjusting journal entry without talking a whole lot about the original journal entry. I think it's easier for these if you go back and think of the original journal entry and then what the adjusting journal entry is. So when they put the Super Bowl ad on, they no longer owe us anything. They debit unearned revenue. That's a liability account. And a debit to a liability account is a reduction of a liability. They reduce their liability, and they can count revenue. They now get to count our $5 million as a sale. Even though they received the cash perhaps 6 months in advance, when they put their ad on, that's when they can count it. They have then provided the service. Prepaid expense is just the other side. And I wish they would call these things the same thing. Just like accrued revenue and accrued expense, they use the same term. I wish they'd call it prepaid revenue and prepaid expense. These are just mirror images of each other. This is from our perspective, from the college's perspective. We pay $5 million to Fox 6 months before the Super Bowl. And so when we do that, the original journal entry, we're going to debit an asset, prepaid advertising. That's an asset. The asset is somebody owes us an ad, a 30-second ad on the Super Bowl. And of course, we're going to credit cash, reduce cash because we've written a check for $5 million. Then, when February rolls around and we get the Super Bowl ad on, we're going to reduce our asset. No one owes us that anymore. And we're going to debit advertising expense. We've incurred the expense. So for you and me, when we write a check, if we were to write a check for $5 million, we'd count that expense the month we write it. Organizations don't count the expense until it's actually the service has been provided. So that's what all this accrued revenue and expense is about. Now this is advertising. It could be prepaid rent. If we were required to pay rent in advance for a space, we'd credit cash and debit prepaid rent expense, perhaps, and that would be an asset. Then when we use, and they owe us something, what do they owe us? They owe us space to occupy for the next 6 months, if we had 6 months of prepaid rent. Then, each month, we'd say, well, 1 month of the asset has gone down, they have provided that to us, and we would have rent expense. But these are kind of the generic journal entries for unearned revenue and prepaid expense. There's a fifth journal entry, we'll get to that one in just a minute. The fifth type of adjusting journal entry is depreciation. And again, think of the original journal entry and the adjusting journal entry. Let's say the college buys a car, a college vehicle so students can go places, and we pay $25,000 for it. Auto, we'll debit auto, which is an asset account. We increase our asset. We have a car that we didn't have before. We credit cash. That's a reduction of the asset cash for $25,000. Let's assume we're going to use straight line depreciation over 5 years. We give vehicles heavy duty use, and at the end of 5 years it's not going to be worth very much at all. So the adjusting journal entry is debit depreciation expense. That's an expense account, and because it's 5 years and it's $25,000, that will be depreciation of $5,000 per year. Credit accumulated depreciation. What type of account is accumulated depreciation? It's called a contra asset account. Contra asset account. It's an asset account. The word contra means it's opposite the usual asset accounts. Assets are usually debits. If you go back to, I guess, the Chapter 2 video and the Chapter 2 text, assets are usually debits. Accumulated depreciation is an asset account, but it's a contra asset. It's usually a credit balance instead of a debit balance. So contra means opposite, and to increase accumulated depreciation, you credit the account. So it is an asset account, but it's a contra asset. Okay, a lot of material in Chapter 3, 5 types of adjusting journal entries. Think about these, study, and good luck with it. See you next week.